Hey everyone, Couch Investor back to another video for today. So some of you probably already know what I'm going to talk about, but for those of you that don't know what the thumbnail meant, basically it was revealed that Microsoft expects to generate $500 billion or $500 billion of revenue by 2030. Now in this video, I'm going to go over that report. I'm going to talk about the numbers and I'm going to show you with a simple Excel sheet why these numbers aren't as crazy as they sound. Now, last year, fiscal year 2022, the company generated just shy of $200 billion. Now, of course, some years they will grow faster than others, but you're going to see by the end of this video that these numbers are not that crazy, and actually $500 billion might actually be conservative, all things considered. Of course, you still have share buybacks and also dividends. Now, of course, things will change along the years as the acquisition of Activision Blizzard gets approved. That gets into the business model as well, so the numbers will change. But overall, the numbers aren't crazy, so let me show you. So first up, this was the report, the article. So Microsoft CEO Satya Nadella set goal of $500 billion in revenue by 2030, court filing shows. Now, Satya Nadella also laid out a forecast for shareholder returns, which come in the form of dividends and buybacks. We believe this ambition and approach will help us deliver in excess of 10% annual returns to our shareholders over that time frame. Now, Nadella described a goal of 2020 involving 20% year-over-year revenue growth and 20% operating income expansion for the 2022 fiscal year and subsequent years. Now, before I continue, the last quarter we got here, revenue increased 7% or 10% on a constant currency basis, and operating income increased just 10% or 15%. So quite far from those numbers that they think they saw in 2022 and onwards. Now, it is true that if we go back to full year 2022, so the annual report here, we can see that revenue increased 18%. And if you look at operating income and net income, that increased 19%. So yes, again, some years they will grow faster than others. Now they continue by saying here, the main driver of growth is Microsoft Cloud, a term that refers to a broad suite of products directed at commercial clients, including Azure Public Cloud, which competes with AWS and Google Cloud, part of Microsoft 365 productivity software, and portions of LinkedIn. Our priority is to maintain growth above the market rate to extend our lead over the Google Cloud and close the gap on AWS. Now, what does that mean, grow above the market rate? Well, the global cloud computing market is expected to grow at a CAGR of 14.1% from 2023 to 2030, and in the United States, 13.1% during that same period. Now, if we go and look at the annual report for 2022, you can see here that Intelligent Cloud is the segment that has grown the fastest, so 25% there. It's also the biggest segment at $75.25 billion. Productivity business processes, 63.3, and then more personal computing, just under $60 billion. When you look at operating income, same thing there, Intelligent Cloud growing the fastest. And in that, they say here, server products and cloud services revenue increased $14.7 billion or 28%, driven by Azure and other cloud services. Azure and other cloud services revenue grew 45%, driven by growth in their consumption-based services. Now, of course, again, 2022 was an amazing year for the company. If we look at the recent quarter, revenue in Intelligent Cloud was $22.1 billion and increased 16% or 19% on a constant currency basis. And then they say here server products and cloud services revenue increased 17%. That is driven by Azure and other cloud services revenue growth of 27%. So still quite remarkable growth there. Now, of course, if we look at past returns, so if you're a shareholder for many, many years, you've done very, very well. Currently, market cap of $2.46 trillion, a forward PE of 31.5 times. Now, of course, it's not one of the cheapest, but for a company that is growing into various growing markets, various segments, I think it's an okay PE to have, a forward PE that is. And remember those numbers for the Excel later on. Now, if you're enjoying this type of video so far, leave it a thumbs up, subscribe if you have not, would really appreciate that. And if you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. So now that we've gone through the numbers, let's have some fun with the Excel sheet. So I basically cut it into three parts here: the cloud segment, the productivity one, and then the personal computing one. Now, I didn't use the annual 2022 report numbers. I annualized the numbers that we've got from the last earnings report. So for cloud, $88 billion, productivity, $70 billion, and then personal account, $53.2 billion. For cloud, for now, I put 14% growth. For the other one, 10 and 8%, of course, for the next 7 years, so up until 2030. And so by 2030, we will reach $220 billion in revenue for cloud, $136.4 billion for this segment, and $91 billion for personal, which means total revenue in 2023 is $447 billion. So just shy of that 500 billion projection, which also means that we'll get an EPS of 22. Now, if we put a PE ratio of just under the number we've got right now, so 30, with a net margin of $161 billion, if we take the same percentage that we have today, which I think is 36%, then the stock price should be $645, which is close to doubling from right now. Now, if we say that the cloud segment will grow much faster, so let's say 18%, and the rest will stay the same, 10 to 8%, then you currently see we are reaching that $500 billion mark pretty easily. And then the stock price is $732. No dividend reinvested, no share buybacks. Now, if you want to be even more conservative, I've put two segments at 1% growth, and the cloud stays at 18%, even though I think we could let's put it at 20% growth. Then we are reaching $447.4 billion. And that's very, very conservative, because remember, the global IT spend right now, 90% of it is still on-prem. Most of it will go off-prem sooner rather than later. And so over time, all these huge cloud players will definitely gain from that. So putting 20% growth here for cloud is pretty okay. And if you want to be extremely bullish, then I put 25% growth for cloud and 10% for the two others. And so we're reaching $659 billion in revenue by 2030, earnings per share of $32, and we reach a stock price of $950 by then. Again, this is the hyper bullish scenario. So now that you've seen the numbers, it's not that crazy, right? That we're going from 2022 just under $200 billion in revenue to $500 billion in 7 years, right? Not so crazy. Now, of course, you can play around with the numbers all day long, but I think we've covered all the ranges there. $500 billion isn't so far-fetched. But of course, I would love to hear your thoughts down in the comments below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.